Good morning. Let's talk about something that affects all of us, the US dollar. Today, the dollar is more than just America's money. It's the world's money, shaping economies and influencing daily life far beyond US borders. Whether you're traveling, shopping online, or investing, chances are the dollar plays a role. When countries buy and sell big things like oil or airplanes, they almost always use US dollars. This makes the dollar the world's reserve currency, held by central banks everywhere for safety and trade. In fact, over half of all global foreign exchange reserves are kept in dollars, showing just how much trust the world puts in it. This gives the US a powerful position. It can borrow cheaply, and it can use financial sanctions to influence other nations. Most international bank transfers go through American systems, making the dollar system a cornerstone of global finance. The US dollar's reach extends into nearly every corner of the world economy. The world has grown used to this dollar-centric system, making international business predictable and straightforward. It's a system that brings stability, but also gives the US unique advantages. But what if that started to change? What if another major country wanted to rely less on the dollar? For years, China has been quietly working on a plan to do just that. Aiming to boost its own currency's role in global trade. They're not trying to make the dollar disappear overnight, but are taking slow, deliberate steps to build an alternative. This is the story of a massive shift that could reshape the world's financial landscape for generations, and change how countries interact on the global stage. Now let's turn to China and its long-term vision for the future of global finance and its own economic security. China is a global economic powerhouse, but it's deeply tied to the US dollar, holding trillions in US assets, from government bonds to corporate investments. This creates a major vulnerability. If the dollar falls or faces instability, China stands to lose enormous value almost overnight. US sanctions are another concern. China has seen how America can use its control over the dollar to pressure other nations, freezing assets or cutting off access to global markets. To secure its economic independence and future growth, China wants a world where it isn't so dependent on its biggest rival for trade, finance, and reserves. The goal isn't to crash the dollar, but to manage a slow, careful exit, one that avoids shocks to the global system. China's strategy is a multi-phase plan, unfolding over 15 to 20 years, involving both domestic reforms and international outreach. It's about building its own systems, encouraging others to use them, and reducing its dollar exposure without causing panic or sudden market reactions. This quiet revolution began over a decade ago, as China started laying the groundwork for a new financial order. China is creating its own versions of the systems that make the dollar dominant, from payment networks to development banks, and even digital currencies. It's a revolution built on financial technology, currency agreements, and patient diplomacy, as China persuades partners to join its new networks. The aim is clear: to dethrone the dollar by offering a compelling alternative, and to reshape the global financial landscape for decades to come. The first phase of China's plan was all about construction. From 2014 to 2020, China built the infrastructure needed to operate outside the dollar system. In 2015, China launched the Asian Infrastructure Investment Bank, AIIB, a competitor to the World Bank. That same year, it created the Cross-Border Interbank Payment System, CIPS, an alternative to SWIFT. In 2016, the Chinese yuan joined the IMF's special drawing rights basket, gaining global legitimacy. These moves signaled that the world's financial order was starting to shift. China also began developing its most powerful tool, a digital currency. By 2020, the digital yuan pilot had expanded to 28 cities. Unlike Bitcoin, this is a digital version of China's official currency, controlled by its central bank. The vision enables instant international transactions without the dollar. With these building blocks, Phase 1 was complete. We're now in Phase 2, which began in 2020 and runs through 2027. This phase is about testing and expanding China's new financial tools. The digital yuan has exploded in use, with hundreds of millions of wallets and cross-border pilots with countries like Thailand and Saudi Arabia. China's CIPS payment system has grown from $4 trillion to over $50 trillion in transactions. Trade with Russia now largely bypasses the dollar, using yuan and rubles. China has set up currency swap lines with over 40 countries, including Brazil and Saudi Arabia. These agreements, totaling over $500 billion, reduce the need for dollars in global trade. Each transaction in local currencies chips away at dollar dominance. The world is starting to see that a dollar alternative is not just possible, it's practical. Let's look at the tools China is using to reduce its dollar dependence. First, it's slowly selling U.S. Treasury bonds, down 35% over a decade, in a managed retreat. Instead of buying more U.S. debt, China invests in gold, other currencies, and global infrastructure. The digital yuan allows instant direct payments, even for oil, bypassing the dollar system. Alliances matter too. The BRICS group, now including Saudi Arabia and Iran, is building its own payment systems and discussing a new reserve currency. By working together, these nations represent a powerful bloc that can shift away from the dollar. China's approach is methodical, using every tool at its disposal. The world's financial balance is quietly shifting. Changes in the world's dominant currency are rare and slow, but history shows they do happen. Before the dollar, the British pound was king, thanks to the British Empire. The shift to the dollar took decades, formalized at Bretton Woods in 1944. Before that, the Dutch guilder ruled for much of the 1700s. These transitions were gradual, driven by shifts in economic power. What's different now is China's deliberate, accelerated strategy. Instead of waiting for history to unfold, China is engineering a transition in just 15 to 20 years. Modern technology, digital currencies, and instant communication makes this possible. The world has never seen a currency shift happen this fast, or this intentionally. We're witnessing a generational change, sped up by design. The final stage, Phase 3, is projected for 2027 to 2030. This is the tipping point, when China's alternative systems become mainstream. A major trigger could be the launch of a BRICS common currency, possibly backed by commodities. Another, Saudi Arabia, selling a significant share of oil to China in yuan, cracking the petrodollar system. If these moves reach critical mass, other countries will follow. China's treasury holdings could drop below $600 billion, and CIPS could rival Western payment systems. The digital yuan could dominate belt and road trade. When these pieces align, the world will shift from a dollar-dominated system to a multipolar one. The global financial order will be fundamentally changed. How will we know this shift is happening? Watch these signs closely, because the evidence will be subtle at first, but unmistakable for those paying attention. China's U.S. Treasury holdings, if they fall below $800 billion in 2026 and keep dropping, the plan is on track. This decline signals a deliberate move away from U.S. debt, and it's a key metric to monitor. Oil trade, if 10%, then 20% of China's oil imports from Saudi Arabia are settled in yuan. It's a direct challenge to the petrodollar. This shift would mark a historic change in how global energy is priced and paid for. BRICS announcements, a successful BRICS pay test or a timeline for a shared currency, would be a game changer. These moves could reshape international trade and payment systems. Expansion, more countries joining BRICS increases its economic weight and global influence, making the group a more formidable force in world finance. The US Dollar Index, DXY, if it trends below 90, global confidence in the dollar is slipping. This would be a clear sign that the world is rebalancing its trust in currencies. These are the real-time indicators of a new financial world order. Each one is a signal, and together, they paint a bigger picture of transformation. The revolution is quiet, But the numbers will tell the story. Change often happens behind the scenes, visible only to those who know where to look. Watch these metrics. They'll show how close we are to a new era. Stay alert, because the data will reveal the truth before the headlines do. The world is watching, and the change is accelerating. Every day the pace quickens, and soon, the signs will be impossible to ignore. What would a less dominant dollar mean for us all? We'd likely see a multipolar currency system: dollar, yuan, euro, maybe a BRICS currency. For Americans, borrowing could get more expensive, and imports might cost more. The US would lose the exorbitant privilege of cheap debt. For the world, there'd be more choice and less risk. Countries could diversify reserves and reduce exposure to US policy. US sanctions would lose some power, but currency volatility could rise. This is one of the biggest economic shifts of our lifetime. Understanding this quiet revolution is the first step to preparing for a very different economic future.